So many people are scared about investing in the stock market. They hear horror stories, they see bear markets, and they just think maybe the stock market is not a good idea. Therefore, I think this book by Brian Feroldi is very helpful to help you understand why the stock market generally goes up. A stock price is really determined by two things. Number one is the earnings or profit that a company makes. And number two is the multiple that is applied to those profits. Multiples go up or down depending on people's perception about future profits. But you've also probably seen images like this that show you we spend much more time in bull markets where profits and positive perception are going up than we do in bear markets that tend to have negative perception. And if we look at earnings, Brian in this book actually describes 7 reasons why earnings tend to go up over time as well. First, we have technological advancement and therefore productivity gains, which increases margin by lowering costs of operation. And number 2 is that we have innovation. And if you look at a stock market as a whole, it is naturally self-cleansing in that the less innovative companies come away or out of the stock market, and new innovative companies that are offering new value propositions come into the stock market. Number 4 is that companies tend to grow into new geographic regions and therefore sell more product and therefore make more profit. Number 5 is that we have population growth. So there is a natural demand for new products and services that allows these companies to, again, increase their profits. Some of these companies may also grow via acquisitions, which creates a step change in their revenues and their underlying profits. And if companies have spare cash that they don't need to reinvest into their operations to grow, they could end up buying back shares at a favorable price, which ultimately reduces the number of shares that are out there and means that the shares that you hold are now increasing in value. So the share count goes down and the price per share goes up. So it is very much proven that the stock market goes up over time and outpaces a lot of other assets that you could choose. So I don't think it's about learning if you should invest in the stock market, but rather how to invest in the stock market. Buying the whole stock market instead of just a few stock picks is a very different story. Right, back to the gym.